All right, hello everyone. Welcome to the first webinar of 2020. So before we get started, just want to do a little bit of housekeeping. Before we start, can you guys let me know if you can hear me all right? Just maybe type a Y into the chat. Beautiful. Looks like we're up and running. All right, so again, welcome to the first webinar of 2020. My name is Shane. As we go through this, we don't have a crazy amount planned, but there was a few subjects that came up quite a bit while we were going through the break. A lot of emails that we got regarding a few topics. So Wade, when he takes over, he's going to be going through some of that. A quick reminder, the webinar is not really the best place to go through and try and figure out tech support issues. So if you've got any tech problems, feel free to send an email to support@tradeats.com. And also remember, while Wade's going through his the subjects that he wants to cover, feel free to type in a market that you maybe want us to look at when we get through that stuff, and we'll go through and take a look at maybe a trade you've got open or just something that you want a second opinion on. So, and when you do so, make sure to write the time frame that you're looking at it as well. So for instance, if you're looking at, pound dollar on the 15 4-hour and daily or whatever it is, make sure to, write that so we can make sure we can, we're all looking at the same thing and you're getting the most out of it. Anyways, that being said, I'm going to go ahead and hand it over to Wade. And thank you all again for being on. Take it away, Wade.
All right, thank you, Shane. I want to welcome everybody. Like Shane said, first webinar of 2020. Exciting to kick off the new year. I hope everyone enjoyed the break. I know I did. I love coming into end of December, just not thinking about markets for a while is definitely usually a welcome break after going through the whole year and grinding it out. So anyway, we have a lot of cool stuff planned. I know I've probably said it on, or I have said it on past webinars. We got some cool software updates coming out. We got the expansion index coming out, which I'm actually have got the final code as of a couple days ago that I think is the winning code. So actually, let me pull my screen up so you guys can see that. Hang on. Okay, so okay, should be up and running there. So we got the expansion index coming out, which is that indicator that's on the bottom of my screen right now. So excited about that. We have a update to ATS Assistant that we've been working on as well. That's going a little bit slower, but that should hopefully be coming out here within the next 30 days or so. And then we also have an update to the actual ATS, the base chart mapping indicator that we use on our screen, where we're going to be able to use regular candles, so you can switch between Heikin-Ashi and standard candles. And there's going to be some cool functionality in there, and also you'll be able to change colors and everything. We're going to let you guys have control over all that stuff if you want a different color scheme. So anyway, got some cool things in the works that way. Definitely have a lot of content planned for this year. We're going to try to get on schedule to be making new content on a weekly basis. I think we're getting to a place where we can probably make that happen a little bit easier. So we want to definitely be giving you guys as much as we can content wise, and making sure that you guys are getting your skills brushed up using the system. And then also too, we want to do a better job at scouting markets, things that are really moving. For instance, gold. You can see I have it pulled up on my screen, which it kind of ran up through the end of last year, which was kind of weird. But to have a big run right through Christmas and New Year's and all that, but that's the markets. They can move anytime. But just absolutely amazing. It's starting to really open up. So that's definitely a market that we're we're watching, just because there's a lot of opportunity in that one right now. So anyway, so we got a lot of cool stuff coming out. And this webinar, I really don't have anything scripted or planned. I don't have a PowerPoint for this one because I've actually been working on getting all the ones that we did on the previous webinars. We're getting those, the final recording done, and those are going into the online course. So those should be updated probably by next week. Of course, we'll send out an email when those are done. But anyway, we've been working on that stuff, trying to get it wrapped up. So for this webinar, pretty much I want to talk about a topic, and I'm going to start that topic here in a minute. But also what I want you guys to do is if you have any particular markets or anything, you guys, while I'm talking, if you want to type those in, I don't know if I'll be able to get to all of them, depending on how many people put it out there. But I can look at a couple markets when I'm done talking, and we'll just kind of go over, what's going on in those markets. And just let me know the market and let me know the time frames that you're looking at. That way I can pull that up and we can all be looking at the same thing. And we'll address those at the end. But other than that, so one thing I want to talk about is it's basically like Shane was saying, we get emails in the office and it's the recurring theme is always risk management. And it should be, because it's a really important topic for sure, is understanding when is the trade. Everybody knows when the trade's going their way because you get in the money and it's wonderful, right? But when a trade's not going my way, what do I do? How do I know when to get out? Can I just check if everyone could hear me okay? Because I do see a couple or someone in the chat here saying they're having a hard time hearing. Can you just double check before I keep going on here? Just type a Y or something. Okay, it seems to be okay. So it might be just a one-off that's messed up. Shane, maybe you could check in on that. Anyway, so going back, so talking about risk management, understanding when a trade isn't going my way, and how long do I hold on for, and when do I let it go? So, and I also want to talk about this in regards to the ATS assistant. So we'll tie that in along as well, because I know some people they get into our program, they see that we have a signal generator, and I know that in Forex it's just widely baked into people's heads that signals means signals. I just buy and I sell and I make money and that's it. It's as simple as that. It'll never be as simple as that. The ATS assistant is designed to alert you to criteria, counter trend movement, based on timing with the three market phases. There's a level of finesse that goes into seeing if those entries are going to be good, or if they're good at that moment. Some of them are good right then when you get that notification, and some of them need some time. And that's understanding the overall framework and where the boundaries are. But the assistant is there to alert you. Excuse me. It's there to alert you to that criteria. That way okay, the market is setting up, and that way you don't have to just sit around and babysit your computer 24/7 waiting for that. It's just supposed to be a helper in that way, but it doesn't take away what you need to do to be able to actually trade. You still need to size up these opportunities. So when we're talking about risk management, the basics of what we're doing is we have to find a trending market. If the market isn't trending on the higher time frame, and we're talking about a 2 time frame setup for basics, you have your higher time frame, you have your lower time frame. And let's say, like I said, the most popular one's probably the 15-minute into the 4-hour. So let's pull that up right here. We have a 15-minute into the 4-hour. So what we need is a trending market, and on the higher time frame. And what that means defined is that you have a last average price expansion line, the white line, and you're either above or below. That's defining where the wave of liquidity is headed. Okay, that's where the flow of the ocean, right? So right here we had our box, and this went into that big run here, and clearly we had green above white. So that's telling us that time frame, the momentum is headed in that direction. Very simple analysis, okay? You want to leave these reds alone, stay in those green runs going up, okay? And then that's, in the hopes it's not always going to turn into a gigantic run like this, but if you stay consistent to that, you will get into these big runs because they will happen, okay? So we have that situation right now. We have a reversal at this point. We dropped down. We had a new expansion line form on this candle here. So now it's starting to crawl down. I don't know how, because the weekly is still long, but at this point, if you're just looking at the 2 time frames, for simplicity's sake, you're trying to stay on the short side until the 4-hour rotates against you. So when you're looking for a trade, you need that clearly defined trend. Okay, if the trend is not clearly defined, then there's no trade. So that's where it starts. We get people that will send us screenshots and they'll say, "Why isn't this trade working?" And you'll look at their higher time frame. Their higher time frame's in a box. That's going to cause a bunch of indecision and wild movement on the lower time frames. So you have to clearly define which direction is the ocean flowing and start from there. Now, when it comes to risk management, we'll talk about this situation right here. You have clearly red on the 4-hour, right? You're under expansion, showing you that the flow of the ocean's headed down. Now, like I said, I always say back up. If you're trading intraday, you're trading the London, New York sessions, you're using the 15 and the 4-hour, understand the direction of the week. Which way is the week headed? And we'll glance at that right now, because that will weight how involved you get in trades that are against the weekly. Clearly, it does not take a rocket scientist to tell you that that is long. That weekly is clearly long, okay? So going back to the 4-hour, when you know the weekly is long, how anxious are we going to get about trading short in a situation like this? I'm not saying don't do it. You can do it, but are you going to watch it come down and then you're going to go? You see these candles that have some indecision in them, and you're just going to go, I'm going to go all in right in here going short. You know it's against the weekly. I'm not saying don't trade it. It very well could be a reversal. You could get some movement to the short side, absolutely. But you know that the bigger flow of money is still going up right now. So the bigger opportunity would be a rotation back and a development back in that direction of the weekly chart. So like I said, you can still trade against the weekly, just be a little more conservative, just my opinion, all right? So when you're looking to enter right now, let's just say you did go short, okay? What you have to do is if you're using ATS Assistant, let's say you're using it on the 4-hour, you'd be getting grade B signals. Like for right here, you have red candles on the 4-hour. If you break out upwards out of a box, that's one of the triggers to say, hey, this is a grade B signal. Now you could enter on this. You're still pretty tight inside here. Remember, none of this has happened yet, right? So you enter short, see how the market flips down and it holds. You get below average price right here, below that expansion, but then it holds up. That is a clue, okay? The progression of a trade, when you take a trade, you need it to work its way back through average price, hold below if you're selling the market, and then make progression downward. If it does not happen, that's your first clue that, okay, it's going to make a bigger correction, which is fine. Okay, this is okay. It's okay to take a small loss or a break even in a situation like this, because what you know is that if it's not going right now, it's going to go and you can get the price here or even up here. You get a better price coming back down to that point of origination right here. Okay, because as long as the trend on the 4-hour holds intact, you're going to keep gravitating back towards those average prices. Those are the real center of gravity in the market. You see, they're just like rubber bands. Every time price comes back out of trend, they whip right back down. So that's what you're looking for, that progression to keep moving down. Now, when you enter a trade, you want to reference the average price that you're working with, the current one, but you want to reference the ones previous too. And that will help you define the overall swing of the range. For instance, if you entered, let's say you sold up here, or let's say you're building a position with smaller positions. Right here, the range from right here, you're going to kind of calculate back to the last accumulation, consolidation, contraction period, which is in here. So you'd look between here, and you can measure that out. Okay, so you got it's about a 1,240 point range in gold that you'd be working within right here. And your expectation, if you're building a position, the further you deviate away from here, the better, because then you're going to get a bigger trade coming back, right? But you're catastrophic out when it's no longer good. You need to look at this prior range and this architecture and see right here out of this expansion line, it's coming right out of the middle of this group. You know that if price gets much above here, it's probably not good anymore. So that right there is a way to calculate your risk. And also by that time, your supporting time frame is probably going to be green and rotated against you. See, it's starting to turn green right now. So that you want to look at the expansion lines as individual expansion lines, but also as a group. Okay, you want to look at the architecture that way and figure out where the overall kind of box of price action is and the range that you're dealing with. That way you don't just see one individual candle and say, I'm going to rip short. You just go short and now you're just kind of lost. You got to look at the overall architecture and figure out what's the worst case scenario. Remember, these expansion lines are centers of gravity in the market. So you could be going short right here, but if it doesn't work out, then this line is still pulling center of gravity. Now the trend is stronger short. So we're going to have a bias towards going short to the short side, but when it does reverse, these lines will pull price back to these levels. It will go back. Okay, so that's how you know. You look at those previous expansion levels and also their corresponding liquidity lines, and you know that that's the general range. If it goes against you, that's your risk. That's the potentiality of what can happen in these markets. And so hopefully that kind of helps you guys. And a thing with ATS is people say, well, should I use a 20 pip stop? Should I use a 30 pip stop, depending on my time frame? The market sets its own parameters. We do not set parameters on the market. That's why ATS has no settings. Okay, the market is going to build the architecture, and this is telling you this is the range from this expansion to this expansion. Right now, like I said, it's about 1,300 points from expansion to expansion. That's what the market says it is. If that's too big of a risk for you, then you wait till it gets closer to your out points. Right here, you may have not wanted to rip this short, or you may have done it very conservative. You can sell this rotation and stick your stop right above this high. And if you get stopped out, have a low risk, but you learn more information. You learn that we're probably gravitating further towards this expansion. So you could have again got back in right here, and this one came down and paid you back to this expansion right here. So anyway, you have to look at that overall range, where you came from, where you're dealing with, and understand what are the potentials for these lines to draw price back to, and that will show you your downside to where you get usually an ultimate rotation. I'll tell you right now, if price comes back up through these expansion levels, this is going to be full-blown green. And what does that mean for the 4 hour? That means that we are probably headed back up to this expansion level. And you can see that develop. So we get screenshots sent into us with people. They get into the program. They slap ATS Assistant on. They don't learn how to read the chart map. They don't spend any time with it. They take a grade A or a grade B signal, and then they just let it run against them. And they have no idea, like, what do I do with this trade? And that's why we tell you in the tutorials for ATS Assistant, you have to spend time learning the framework of the market so that you can size up those opportunities. It's just going to tell you the criteria, which is valuable information. We want to know when the market is setting up with counter trend liquidity and the timing of the expansion. We want to know when it's doing that, but we don't blindly enter the market. We wait for price action, for the action of the market to show us something that makes sense, and we can define our risk within that range. So Anyway, that's something I wanted to touch on. So just to wrap it up, look at the previous expansion levels, measure between those, and understand what's the potential if these things rubber band price right back to that level. That's going to be your downside. At that point, what is your higher time frame going to look like? Is it going to be supporting you anymore in that direction? So right here in this case right here, if you would have got back in short on the 15-minute right here, you rode price back down. Another clue that the trend is not continuing is when you start holding these average price lines. See how we came back? We held right here. This is okay. You got back in, came back down. It held this level again. It's showing you that price is not wanting to break. That's a clue of a reversal right here, that you're not wanting to stay below these average price. It's not making progress in trend. So that's something that you have to put together in real time. And you can test these entries. You actually still can make money, even though the trend isn't progressing. You could still make some pips just testing these entries, coming back to these reference points. But eventually, you got to get the clue. And also, too, you could see it represented in the candles on the 4-hour. Right here, would I be trying to trade this short? No, I got a green candle on the 4-hour. I see that these previous entries have already had a chance to further the trend. They didn't. This spells reversal all over it. But you can see if you're just looking at this one individual candle, then you're losing sight of the bigger picture. And that's how you get yourself into trouble. You just say, okay, look, it's above expansion, go short. No, what happened back here? What did this tell you about the market? So you guys got to kind of learn how to do that. And I know it takes time, but that's really what it comes down to. It's about reading price action. ATS is an indicator, but what it is it's a price action classification tool. It's classifying price action in a very repeatable way so that you guys can see that same repeatable information and then make those calls in real time. Nobody can predict what's going to happen in the market. We don't have a crystal ball. We can't tell the future, but what we can do is figure out probabilities based on trend. We understand a clearly defined trend, and we understand price action in regards to the center of gravity in and around the expansion lines. And that's really as close as you can get to understanding, the sensitive prices in the market and the framework you have to work within. And anyway, so hopefully that kind of clears up a little bit with in regards to risk management. We are working on new tutorials that'll go deeper into those things and examples, trade examples, all that. We got all that stuff coming out this year, sooner than later. So that's the stuff we're always going to drill in on. That is the two things that you guys need to know is clearly understanding trend and understanding when a trade is progressing or it's not progressing. When it's not progressing anymore, you may be in the money on a trade and learn that it's not progressing. You take the profit out and wait. Helping you guys understand how to put pieces together in real time. That's what we're going to be trying to drill down in the educational material and the new stuff we have coming out, because that's ultimately what it's going to take. You guys can't just get in trades, set it and forget it. Going back to a few of we've had a number of people send in, but that's been an issue, is they get in on ATS Assistant, they let their let's say they get a signal from the 15 into the 4-hour, they get in, the 4-hour rotates against them. It's a full-blown reversal. And remember, those grade B signals, eventually those are going to reverse. The grade A is the closest to the turn. So those are the ones that you can, if you're going to go a little heavier on, or those are the ones you really want to pay attention to. But those grade Bs, they're still okay, but those are situations that end up like this eventually. So you got to be a little more careful with those. But they have these indications that we talk about when the trade's not making progress, but they didn't go through the course. They didn't go through and learn to determine price action and spend time with that first. And so they let things rotate against them and go negative on these trades. And it told you a long time ago that the market was turning. You had those indications long time ago, and now you're in this trade maybe days, where it's just, you're just waiting for it to come around, no risk management, no nothing. So you got to be careful with that. And if you guys need a hard level of risk management, go off of what everyone, it's commonly taught. Don't risk more than 1% of your account on one position, and just let that be, let that be your stop. If you need something just to discipline you to something so you don't get blown out. We don't want you guys to lose money. We want you guys to be conservative and learn how to read the framework of the market. This does not need to be an expensive lesson. You do not need to put, 10, 15, $20,000 in an account and just start trading in order to learn. You should trade with real money, but just enough that is meaningful to you. You don't want to trade too low, like 10-cent pips, or something where it ends up being like you don't really care about it. You want to trade just enough to where there's a little bit of feeling with it, so you get used to that, but then build from that, so that you guys, there's no reason to lose a lot of money when you're learning Forex. It's just not. The education doesn't need to be that expensive. So ask me how I know. So anyway, I just wanted to go through that, and I wanted to clear some of that stuff up with you guys. And hopefully that helps. And I apologize, I didn't have any kind of PowerPoint or anything ready. We just had a lot going on coming into the new year. But we will try to have something meaningful for you guys on these weekly webinars. I think next week we're probably going to try to do the webinar on Tuesday. We kind of go between Tuesday and Thursday, just depending on what's going on. But I know we kind of prefer doing the Tuesday webinar. So we'll see how it goes. Anyway, I'm going to skim through some of your questions. Shane, if you have anything to say or bring up, you can for the moment. I'm going to read some of these questions. I know a bunch of you guys have commented here. I don't know if I'll get to everyone's questions, but what I'm going to do is I'm going to go through and try to pick out the ones that I think that everyone can benefit on. Remember, on these webinars, we got guys that have been with us for years, and we got guys that have been with us for weeks or days. So, I'm trying to pick out the questions that everyone could get some benefit from. If it's something technical support or something where it has to do with the software, we're not going to address those on these webinars. Make sure you guys utilize the support@tradeats.com email and the technical support request in the online course. That's where we handle all those types of things. So make sure those get deviated over to that channel. So anyway, give me a moment. I'm going to read up and try to pick out some questions here. Maybe we'll take a look at some other markets too. So hang on real fast. Okay, here's a good question regarding gold. The question is right now, because I went back and I said the weekly is clearly long. So let me pull back the 3 charts. Okay, obviously, guys, weekly is long, right? And so I do have traders that trade. They work day jobs and they're not able to watch a 15-minute chart. That's one thing I'll just blanketly say for the new people that are on. If you're trying to work a day job, especially in the States, don't try to trade lower time frames. You want to focus on higher time frames, like the 4-hour into the weekly, or the hour into the daily. You want to look at bigger time frames, or the daily into the monthly even is a good one too, because it moves slow enough that you can actually manage it. Because if you're trying to watch a 15-minute chart, you're trying to look at the charts at your house and then trying to manage trades on your phone or on the MetaTrader app, it turns into a mess. So you want to make sure that you can trade timeframes that you could be effective with, and give you enough time for the correct analysis. So just wanted to put that out there. The 4-hour and the weekly right now on gold, you can see gold. I said before, gold's clearly long. We got green candles. It started at the turn back here. So that's definitely clear. Now the 4-hour is our criteria, right? So that's something, again, putting together the puzzle. Is this not a setup for the 4-hour into the weekly? Yes, it is, right? So if the 4-hour turns green, this is now against this average price, right? So could you trade that? And the answer is that yes, you can, because you're coming up with a trading plan, a trading idea based on analysis you see over here. But if the 4-hour, because you are still under this average price, if it turns red again, you got to be ready to dump it because you could be getting another correction. Just like this is an entry here, like we were talking about over here, what's the range you're dealing in? Well, it's from here. The range right now, it is what it is. It's from here down to here, right? You got these two expansion levels. That's the range you're dealing in. So there is a potential that this could turn red and totally correct completely down to here. You have to acknowledge it. There is a potential. So if you're going to trade long on this, yes, you can buy right now, but you need to have a conservative stop on this because right now, in my opinion, the upside, let's say you just get right to here, that's cool. I mean, that you can calculate that, and that there's a good probability that's going to happen. So there's roughly 3,000 points in that trade just getting back to average price, right? But we don't know if that's going to happen. So how are we going to control risk? Right here, probably below this low or below this low, right there. That's you have to, because you're not going to let it go to here. That's what the deal is. And then there can be some things that develop in time where you can actually move your stop up, and and protect your profit, or protect your position a little bit more. But that is the range. That's what we're dealing with until we get some more architecture. So going back, the question was, can I trade this long? The answer is yeah, because you're basing it off of, the weekly is long. We're not trading in the wick of the weekly candle. We're back inside the body, so we can run up again. So that's good news there. So yeah, you can do that. And if that weekly is going long, can you trade against this trade against this expansion? Yes, you can, because you formulated an analysis based on that you're going to get a deviation back up to here. So yes, you've put the pieces together, and this is more of an advancing. This is not what we teach you in the basic strategy, and we don't teach it because there's more analysis to this. The basic strategy we teach you is just something for you to get a totally basic approach and understanding, so that you have somewhere to start. A lot of people have never heard of boxes and expansion, and well, no one does that because no one talks about expansion lines and all that. Only we do. But there's the first time they're looking at anything like this, and we don't want to get too fantastical in the approach because we want them to be safe. So we give them something very basic: 2 time frames, above or below expansion, and that does good. There's everything you need is in that basic approach. But when you guys are getting more advanced, you will start to see things like this. I see that you see this is a setup, a 4-hour in the weekly. You're seeing it right. Obviously, there's more time that's going to take to play this out. And as this 4-hour starts to make progress, you will no doubt start to see entry opportunities on the 15-minute, and you will have confidence because you know where the 4-hour is potentially headed. And so let's say that the 4-hour, let's say you get another candle right here, and it starts to make progress, and then you get a nice counter trend move. You get a box expansion out. You take out some counter trend liquidity up in this neighborhood, and it looks like it's going short, and you go long there, and then it rotates and heads back up. And let's say you're up 30, 40, or you're up significantly on the trade. That you can understand where you may want to hang into that trade longer, because now it's well underway back up to here. You know that on that 15-minute trade, it's probably worth, let's say you enter in this price range right here and you still have up to here to go. There's 2,100 points potentially just coming back to average price. You're putting together the pieces at that point, and that's where you need to get to. Or that's eventually where you will get to if you're spending enough time looking at the charts as a whole. So anyway, hopefully that answers the question. I got a little long-winded on that, but yeah, you're seeing it right. Clearly defined trend. That's where it all starts from. Where can I find, on what time frame can I find a clearly defined trend? and then you work backwards. And then you have the expectation that comes with those trades. This is a 4-hour chart. You know, this thing could range out down here for another day or two before it finally goes. You got to understand that's the game you're playing with this time frame. So keep that in mind as well. So hopefully that kind of clears that up. Let me keep reading here and we'll find another question. Hang on real fast. Okay, here's the question. The question is there a way to show less but more significant expansion in liquidity lines? Um, no, the expansion, it's a set formula. That as long as the market, the price action meets that formula, it's going to draw a box. It's going to draw an expansion when we come out of that box, or if it meets the formula to have an expansion without a box, but it still is there. There was still the correct market action to justify that. It's going to happen. They all hold weight, but if you're looking for ones that are more meaningful, then again, the market, we let the market interpret the market. Okay, so when a market holds an expansion level, see for instance right here, we started to rise up on the 15, and you see that we held this expansion. See how the market came down and tested it, and then we came up. That market is telling you that that's a significant price level. The market interpreted it. So when we came back and revisited it, you'd see that we had another reaction in that level. And this could be representative of this level combined with this expansion level as well. That's creating kind of an expansion range in there. But so if you're looking for ones that are more meaningful, let the market determine it, because the market will set. Same thing up here. We came up, see how we held at this expansion, had a big reaction. That tells us for future purposes, that's a very reactive point. Again, market interprets market. You know, that sets the range, it sets the parameters, and it builds the architecture, and we mold to it. It does not mold to us. So anyway, hopefully that helps a little bit with that question. Okay, let me keep reading. Okay, another one. This is just a comment. It would be really helpful to have some risk reward calculator built in to see if we can afford to get in. I like where your head's at. I'm literally working on something just like that. I'll tell you real quick, my thoughts are that you'll have your lot size put in, whatever you're going to trade or whatever. You can put in, you know, one or standard lot or whatever. So this will calculate whatever you want to trade on the market, and then it'll take a look at your overall account balance, and then it'll give you like a 1%, 2%, and it'll have lines that follow live price over here that show you where, and it'll actually, I'm thinking we're going to have it put an automatic stop on there at that level, and you'll be able to program that so that you can see if I get in, where's 1%. So you'll see that floating line that's floating with live price. And then if you know, like, this is the range that you're working within, and you don't want to let it go above here, you'll see that 1% is like, okay, let's say 1% is up here according to your lot size. Then you can pull that trade, and you know that you're not going to risk 1%, and it's within the market range that makes sense. So that is in the works. It's probably realistically probably a month or maybe a month and a half out, because we got some other stuff that we got to get done first. But yes, we got lots of cool things like that we are working on, just to make the dashboard better, make you more effective at making quick decisions as the market framework changes. So definitely got that going on. All right, let me keep reading. Okay, another question. When's the expansion index going to be ready? The expansion index will be ready. Well, this is the last code right here. So providing. I'm testing it right now. I'm making sure there's no final glitches. I had the final glitch I was working through, like when I switched a currency pair like this, it would disappear. And it would happen randomly. So I think we've got that sorted out, because I don't want to, if it disappears, then you have to go through, load it again, put the license key in again, and all that stuff. So I'm trying, it's like, we had to get that solved. So I think that we did get that solved, because it seems to be working okay now. So anyway, I'm pretty hopeful this is it right here. So we may be able to get it done. I got to talk to Shane, but we may be able to get it done, maybe by the end of next week, possibly, because we do have to create the tutorial videos and the installation videos and all that stuff that goes along with that. But I think the code is pretty much done. So I'd say end of next week. Worst case scenario, probably the week after. Just depends on how much time we get to get everything worked out. But as far as now, I think the code's pretty much 99 or 100%. I'm just going to test it a few more days, make sure it's reading correctly, and yeah, we should be good to go. So, okay, let me keep reading. Okay, good comment here. Just want to, from Kathy, thank you for your contribution. Appreciate it. People have to treat this as a business and be responsible for their investment and their chart work. Absolutely. You guys, if you guys read there's a book. It's a classic. It's Reminiscences of a Stock Operator. It's basically the life story of Jesse Livermore, which is one of the greatest price action traders of all time. Traded in the early 1900s. You go through there, and it's a live account. They don't say it's about Jesse Livermore, but it's inspired by his true story. And they talk about the tipsters in the streets. It's everybody that's running around looking for a tip. They're all, what's the hot stock? What's the hot pick? And they're trying to piggyback off of somebody. And let me tell you that everybody that does that, eventually they may have a few hot tips that they get in, but for the long term, you have to learn how to manage your own trading ideas and positions. It's your business. You have to come up with those ideas. If you're trying to copy somebody, or you're trying to piggyback off someone else's ideas, you better be married to them. And you have to have the exact same account balance. It literally has to be a copy trading situation, which they have automated platforms or whatever. But you can't just say, what are you trading? What's this trade? Because you don't know. They may take a loss, 4 losses in a row. That you may be getting their tips when they're about to go on a losing streak, trying to figure out what's happening in the market. And we have to take losses to learn information. It's the cost of doing business. When you're trading correctly and you're sticking to your approach, you're going to have losses, and those losses turn into profits, because losses, when taken correctly, give you new information. So anyway, going back to that book, is it talks about these people that are always walking around the street looking for tips, and you guys don't want to be that kind of person. You want to come up with quality ideas where you can quantify how you're going to get in, how you're going to manage that trade according to the architecture, and how you're going to execute it. That is where you need to get to be able to stand on your own. Because if you're trying to copy someone else's ideas, or live off of someone else's trades like that, if they go sideways or something happens, or let's say they get you into a trade and now you can't talk to them, well, how do you get out? Because you just randomly opened a trade based on their tip. This happens in the stock market all the time. Someone gets a hot tip from their dentist. Well, I bought Uber. Well, how's Uber stock working out right at this moment? It's cratering. It looks like it's coming around a little bit, but a lot of people bought Uber. There's tons of newsletters and things that came out saying how Uber is going to revolutionize the self-driving revolution. They're going to fire all their people because they're the first to the market with self-driving cars. Well, it's looking a lot like Tesla's leading that revolution. But a lot of people bought a ton of Uber stock only to watch the IPO come out and watch it crash. So point is, you guys got to trade based on understanding price action, understanding the framework of the market. Everything is baked into the market. So, and that's where ATS comes in. That's what we try to create, is a stable platform that defines the market action. It is what it is. The range that it sets is what you have to deal with. And so to stay in real time with that and understand that and be able to make decisions as you need to is where eventually you're going to have to get to. So anyway, appreciate the comment. Kind of went on a little rant there, but that's, you guys have to treat it as a business, and you have to understand where the parameters are and the framework. You have to just understand what it's giving you. If it's something that it's unclear, the trend is unclear, the price action is just unclear, you wait. You wait until it is clear. And then when it is clear and you get in, it either acts for profit or it acts for against you. And then you come up with a set place where I understand that if the market gets to here, it's not what I thought it was based on the price action, and I'm going to cut losses and wait for new information. That's where you have to get to. So, okay, we'll take a few more comments here. We're going to try to keep this about an hour. So let me read, hang on one sec. Okay, another comment about the expansion index. Just wanting, I think you want me to kind of walk through kind of what it works, how it works. We're going to come out with tutorials. I don't want to go too much into it right now. What I will tell you, we did a webinar. I think we actually uploaded to YouTube too. It's in our past webinars that we talked about the expansion index. So I would just go revisit that webinar because I pretty much covered a lot of it. But we will come out with tutorial videos and everything about how to use it specifically. But as a general overview, it's trying to give you normal parameters of again, letting the market define the range that it's operating in. And you're going to be able to understand that when a market expands, is it below normal? Is it roughly normal, or is it above normal? So if you end up getting in a trade or something and you see it turns into a big breakout, you can see based on the highs and lows what the normals are, and if you're starting to really exceed that. Because if you do get into situations where you get a big breakout, for instance, like this, we started to break out high, you can understand that this type of move, when you start getting above that green line, you know that this is a bigger than normal move based on the past so many cycles. So that's what it's trying to give you, a quick readout to understand, is this market acting in its normal ranges, or is it more significant? So we can better weight the trades that we end up getting in. So that's its main function. But again, we'll come out with some tutorials and things for you guys to go through when we actually release it. Question: any plans to expand into crypto or equities? Yeah, definitely. Probably, we're in talks, with some different, with my coders and with some other people talking about maybe getting into stocks and getting ATS on a stock trading platform. If we do that, one thing is, like, we don't want to just put stuff out there unless we can support it well, so breaking into those things, there's a lot of infrastructure that has to go into that, and we just, I don't know, it's up for discussion. I would like, especially cryptocurrencies, I think that we definitely are going to get into more blockchain based assets like crypto for sure. But my main focus is making sure that we've cornered Forex first. That's the biggest, most liquid market. And I just want to make sure that we got you guys the most effective tools that you guys can use to do everything you need to do in Forex, which, you guys already have a super effective tool, but we want to make sure that you're getting the most value and the most use. Because again, our business model at ATS, giving this away for $150 a month rather than charging someone $5,000 or $10,000 up front like other people do. Our model is not to take a bunch of money from somebody, sell them some education and some magical indicator, and if it doesn't work out, they're out $5,000 or they're out a huge amount of money. We take the approach that test the water, it's $150 a month, and it's our hopes that we've given you a valuable enough tool that you'll see the value in, and you'll see that it shows you very relevant information. And as long as you're trading, you won't want to trade without it. And therefore you become a long-term subscriber. And that's our goal is to have you guys come in and hopefully a good number of you guys become long-term subscribers for years, 5, 10, 15 years is our goal. And to have a limited, right now we're trying to sort through, because not everybody's going to make it. We do have a certain percentage of people, they follow zero instructions, they do their own thing. They don't watch the tutorials, and they send us an email saying this doesn't work. Well, it definitely is not going to work for you with the way you approach it if you're doing it that way. You're not willing to spend the time to learn the tool, it will definitely not work for you. So those people fall off, and we're trying to just get a core group of people. I think we're shooting for around, I don't know, probably around 500 to 750 people, I think is kind of the range we're shooting for. And those are people that are totally dedicated to the methodology. And we're going to run with that group. I don't care to have 10,000 people on the product. Don't need it. Don't care to have it. So that's our priority is getting you guys the tools for Forex that are going to be useful, where you guys will, we want you to be here for forever. We want you to find a lot of value in what we do. So that's our main focus. So anyway, I think that's about it, guys. Hopefully you guys got some benefit from the risk management stuff. I know that's an important topic. And again, there's the hardest thing with trading is understanding, when do I get out? Because everyone knows it's been trading a while. If you can control your risk to a tight degree and let your winners run when appropriate, you've pretty much mastered the game. But I think just getting you guys to understand that the market sets of parameters, okay, and understanding when the information has changed based on the initial trade or the initial trading idea, that's where you have to start asking questions. And if you need to take a loss to learn information, then so be it. That's just the name of the game. So start looking at the market as the range is defined with the expansion levels, and see what are the potentialities of price, where can it head to, and let those be those define your risk. And if it's too far away from your out, then maybe don't trade it. Or if you're not feeling confident in the trend, that's really where it all starts, is understanding, feeling confident about the trend on your higher time frames, and feeling confident that where that higher time frame is going to go. If you feel confident and you understand your higher time frame, the trades on the lower time frame become easy. So until you feel good about that higher time frame, usually the best thing to do is just hold tight until it makes sense. So anyway, guys, I appreciate you guys being on. Looking forward to doing our webinar next week. Just look for the invites. We usually send them out. Usually Sunday or Monday has usually been the days we've been sending out the invites. So check your mailbox for that. Also make sure that you're watching your email for the announcements, because like we do have the expansion index, we have these things coming out, and we want to make sure you guys get notified when those are ready, so you guys could get in and download them and start using them. So anyway, again, super appreciative to have you guys on. Really appreciate working with you guys, and look forward to seeing you guys on the next webinar. Everyone have a great day, night, afternoon, wherever you are in the world, and we'll catch up with you guys soon. Thank you very much.